Welcome to This Explainer. Have you noticed a really strange paradox lately? You scroll through your newsfeed and the financial headlines are practically shouting that our economy is booming. Growth is absolutely off the charts. But then, you take a single trip to the local market and your wallet feels way lighter than it did just a few weeks ago. Today we're going to explore a frustrating reality that so many of us are dealing with right now. It literally feels like you're earning more, but somehow you're buying less. If you've been sitting there wondering why your monthly household budget is suddenly under absolute stress, well, you're definitely not alone. I want you to think about your last grocery run for a second. Picture yourself standing there just trying to buy the basics. Vegetables, milk, pulses. Have you caught yourself picking up a handful of tomatoes, looking at the price, and then quietly putting half of them back? It's incredibly frustrating, right? Well, today we are pulling back the curtain on a critical piece of economic data that strikes right at the center of your daily life, your bank account, and even the political temperature of the entire country. Section 1. The Grocery Trap. So, the Ministry of Statistics and Program Implementation just dropped the official consumer price data for June. Now, I know what you're thinking. An inflation rate moving by a few decimal points sounds like dry, boring math meant for university textbook or financial analysts in high-rise buildings. But here's the headline number that completely caught the financial markets off guard. Retail inflation has jumped to a multi-month high of 4.38% on a year-on-year basis. That's a noticeable, sharp spike from the much lower, comfortable figures we saw back in April and May. That 4.38%, it's absolute confirmation that the squeeze you're feeling at the checkout counter is very real, and it's officially documented. Those tiny decimal points aren't just abstract numbers, they literally dictate the price of your dinner tonight. And, as we'll see a bit later, they even dictate the interest rate on your personal loans. Section 2. Understanding Retail Inflation. Before we get into why this sudden jump is happening and the massive political fallout it's caused, we really need to get our baseline facts straight. We need to understand what retail inflation actually is, and why the Reserve Bank of India tracks it like it's the ultimate economic heart monitor. Think of retail inflation, which is measured through the Consumer Price Index, or CPI, as the ultimate price tag tracker for the common person. The CPI doesn't care about the wholesale cost of giant factory machinery, or bulk steel or industrial raw materials. Instead, it meticulously tracks the actual retail prices you pay out of your own pocket for a fixed basket of everyday goods and services. We're talking about the absolute essentials here: food, clothing, housing, electricity, and medical care. It's a mirror reflecting the true cost of everyday survival. Okay, let's dive into this with a real-world analogy to make it perfectly clear how this math actually works. Imagine you go to your local shop to buy a standard family grocery kit. We're talking staples like rice, dal, milk, and cooking oil. If that exact kit cost you exactly 100 rupees last year, and today the shopkeeper demands 104 rupees and 38 paise for those exact same items, well, that difference is what economists call 4.38% retail inflation. You're not getting any extra food for that extra 4 rupees. You're just paying more for the exact same amount of calories. It perfectly illustrates exactly how fast your money is losing its purchasing power, right down at the street level. And this loss of purchasing power brilliantly illustrates why the central bank cares so much. The government and the Reserve Bank of India don't just sit back and let inflation run wild, eating away at everyone's savings. The RBI actually has a strict legal mandate to keep this inflation number anchored at a specific target of 4%. Now, they do have a little bit of breathing room built into the system, with an upper comfort limit of 6% and a lower limit of 2%. But make no mistake, that 4% target is their absolute North Star. Every single policy decision they make is engineered to keep the cost of living hovering as closely to that 4% line as humanly possible. To manage this really delicate balance, the RBI uses interest rates kind of like a giant monetary brake pedal. If inflation starts running too hot, meaning people are spending heavily and driving prices up, the RBI steps in and raises interest rates to cool things down. But here's the critical catch. This brake pedal is practically useless when inflation is driven by sudden, weather-related supply failures rather than overwhelming consumer demand. Raising interest rates makes borrowing more expensive, which, sure, successfully stops people from taking out loans to buy extra TVs or cars, but it doesn't miraculously make more tomatoes grow in a field when a heatwave has completely destroyed the crop. Section 3. The weather's hidden cost. So let's look at how this builds into the main story of what actually happened in the market this month. The data reveals a fascinating but incredibly painful classic case of an economic supply-side shock. This sudden price spike we're seeing isn't because people woke up and decided to buy way more food. It's because the supply of that food suddenly vanished. What's really interesting is looking at exactly where the inflation is coming from. Official data shows that non-food core inflation, things like clothing, housing, and general services, actually remained incredibly stable. But the food and beverage basket, it completely caught fire. And since food makes up nearly 50% of the entire weight of the CPI index, when food prices spike, it drags the entire national inflation average violently upward with it, breaking past the 5.5% mark for that specific category alone. Let me walk you chronologically through the cause and effect loop driving this massive vegetable crisis, because honestly, it's entirely weather dependent. During May and early June, large parts of India suffered through an intensely brutal summer heat wave that caused massive, widespread crop damage. Whole fields of produce basically just baked in the sun. Then, as the heat wave finally broke, the monsoon was highly uneven and severely delayed. This completely disrupted crucial planting schedules for the next batch of crops, while localized heavy downpours in other areas created incredibly muddy logistical bottlenecks. Rural transport links basically ground to a halt. When the daily supply of highly perishable items like tomatoes drops suddenly at a city market, but the consumer demand to put dinner on the table stays exactly the same, the retail price instantly skyrockets. Section 4. The political blame game. Naturally, whenever the cost of basic, essential food items jumps this suddenly, it instantly transforms economic data into a massive, nationwide political battleground. The pain at the grocery stall is something every single voter feels intimately every single day. That makes it a deeply sensitive issue for both the ruling administration and the opposition parties. On one hand, the opposition has launched a fierce campaign pointing out the deep, daily financial pain at the grocery stall, arguing that ordinary citizens are suffering structural kitchen distress while corporate balance sheets look absolutely fine. On the flip side, the government has responded with a very firm, data-driven defense. They highlight that India's broader economic fundamentals remain remarkably strong. They argue that this is merely a temporary weather shock, and they heavily emphasize that the 4.38% rate still remains securely inside the RBI's legally mandated comfort zone of 2% to 6%. And to back up their stance, the government hasn't just been talking. They've launched massive, highly aggressive market interventions to actively force food prices back down. They're releasing huge quantities of buffer stocks, specifically things like pulses and onions, straight into open retail channels to flood the market with supply. They've deployed fleets of subsidized mobile vans to sell essential groceries directly to urban neighborhoods at lower prices. And importantly, they are maintaining a strict, heavily enforced ban on hoarding by major wholesalers to stop anyone from artificially keeping supplies low. The whole goal of this massive operation is to ensure that this current supply shock remains strictly temporary and diffuses rapidly as the monsoon finally stabilizes. Which brings us to the ultimate question. So what? How does a 4.38% retail inflation print and a high-level political debate over vegetable prices actually change your daily life, your savings, and your career options? Look, it's really easy to look at the data and the politics as something totally separate from us, but the truth is, this directly hits your pocket. Section 5. Impact on your wallet. Let's break down the real-world consequences of this economic data. This is where it gets deeply personal, because the effects of a weather-driven inflation spike ripple out into literally every financial decision you make. First off, food inflation functions exactly like a hidden, regressive tax on your monthly pocket. Now, what does that mean in simple terms? It means it hurts everyday working people the absolute hardest. Food isn't a discretionary luxury. You can't simply choose to stop buying milk or vegetables just because prices go up. Because you are absolutely forced to spend a significantly larger chunk of your hard-earned salary just to maintain your basic weekly groceries, middle-class families are left with far less cash available at the end of the month to save, to invest, or to spend on other lifestyle needs. So the crucial point here is how this affects your biggest financial dreams, specifically your debts. This connects right back to that brake pedal analogy we talked about earlier. If you've been eagerly waiting for the RBI to cut interest rates so your home loan or your car loan EMIs become cheaper, well, this new inflation data is a massive roadblock. The RBI simply won't cut interest rates until retail inflation drops sustainably and aligns perfectly back with their 4% target. Because food prices are dragging the overall average back up, borrowing costs are going to remain elevated for the foreseeable future. That essentially freezes any hopes you might had for immediate, meaningful loan relief. Finally, this data underscores something incredibly profound about our modern world. No matter how advanced our technology becomes, no matter how many apps we build or how fast our digital economy scales up globally, our entire financial foundation still fundamentally relies on the weather. This reality highlights the urgent, non-negotiable national need for massive investments in climate-resilient agriculture and highly advanced cold storage warehouse networks. We desperately need these infrastructure upgrades to ensure that a single bad summer heatwave can't just immediately hijack the wallet of the ordinary citizen.
Section 6. The Big Takeaway.
To wrap it all up, the big takeaway from this explainer is that while aggressive government buffer stocks and market interventions are actively working to keep prices from spiraling out of control, seasonal weather shocks still hold immense, unavoidable power. They deeply and instantly connect our daily kitchen budgets to the broader macroeconomy, and they directly influence the RBI's interest rates. It's a really powerful reminder that true financial stability starts right in the agricultural fields. Now that we understand exactly why our grocery bills are spiking, I want to hear from you. Are you actively adjusting your monthly household spending to cope with this market rise, or are you holding out hope that the monsoon will quickly stabilize prices? Take a look at your own budget, reflect on how this impacts you, and let me know your thoughts. Until next time, stay focused and keep learning.